Hi, this is Stephen from Share Navigator. It's November the 19th, and this is your option and future trade update. So, we're going to focus in on SPY, have a little mention about Bitcoin. Let's get started. So, we're looking at our existing short put position on SPY, and you can see we've swung into a loss on the trade of $70. Now, this is temporary, and I'm just going to remind you with a chart of what it is we're actually doing with this particular trade. So, uh, on SPY, we've sold a put option. That's the trade we were just looking at. And we basically agreed to buy SPY down here at 620. So, like, we're miles away from that. And in fact, if you look at the statistical probability of us making a profit on this trade, it's still 89%. So that's a trade I'm not concerned about. Just going to let it run. The reason, by the way, the trade has swung into a bit of a loss is because of this. Look what's happened in implied volatility. It's jumped up. So remember, option premiums go up significantly the more implied volatility jumps up. And therefore, we sold this put option. So therefore, we've sold it, and since then, the implied volatility has gone up. So the value of the put option has gone up since we sold it. But the bottom line is, and the long and the short of it is, once SPY remains above 620 on expiry on December the 19th, we're going to make our full profit of about $500. And I'd be very confident that would happen. So there's nothing to do with that specific trade. We're just looking at a moment in time where the trade is slightly down, but I think that will change. Going back then into our portfolio, our combo spread is down a little bit more here. So you can see that's down $250. Again, I'm not concerned about that, but the reason that's down more is because our break even is closer. It's at 634 on this particular trade. And just to remind you on a chart, what we actually did here, a slightly different trade. We bought the $660 put option, sold twice as many of the 650s. So that's a ratio put spread. So we end up being naked on one side, but ultimately the break even is down here. And again, not really concerned about this. In fact, and this won't be for everybody. What I'm personally thinking about doing is I'm looking at VIX here, right? And if I see VIX spike up to 28 or above, I'm actually considering on the SPY ratio put spread, actually selling my long put option and taking the premium off the table there. So if you look at that now, just in terms of the last price on that long put here, was basically over $1,000 a contract, or sorry, over $1,400 a contract. So what I'm actually thinking about doing is closing this side of the trade down and leaving on the two exposed short puts. Now, you wouldn't do that if you were anxious, folks, if you didn't understand what you were doing, or if you felt that SPY could fall a lot further. So if you feel like SPY can fall a lot further, well, then you don't do this trade, okay? The reason I'm looking at doing it is because I'm looking at the VIXs and the spike in the VIX. And normally these spikes don't last very long and then they tend to retreat. So if I was to just show you previous spikes, there was a spike that lasted one day. Within 5 days, the premium kind of eroded. Even that was kind of a little mini spike there. Look, it eroded quick enough. Same here. It eroded quick enough. This was slightly different here, guys. You got to remember what was going on here. This was your tariff war that just escalated back in March and April. So the VIX really went up high there. I don't envisage that happening at all, unless there's something that comes out of the blue. But I think we're more likely to see something like this. So back here, and we're getting close to it. So if VIX does get to 28, and I think it might do, I think in that situation, I'm actually going to sell my long put and leave open the short puts, because what tends to happen when the VIX comes down, then the index goes up. So if we were to correlate that here, you can see, let me go back to the VIX and let's even get that date. That date there was October the 17th. Now, if we go to SPY, find the correlation for October the 17th. Let's go up here. So you can see here, that's your October the 17th here. That was the spike in your VIX. Look what happened to share price of SPY after that. It went up. If we go back to another example, let me go back to here, which was May the 23rd, and then the VIX started to erode after that. So I'm picking really small examples. If we go to May the 23rd, where's May the 23rd? So there's May the 23rd, and look what happened SPY after that, it went up. So that's what tends to happen. Once the VIX spikes and starts to erode, usually, the index starts to go up. And I'm liking the fact that our RSI on SPY is down below 40. Now, I think that we might go lower yet. So I think the fact that we created a lower low yesterday indicates that we're going to at least test the low of yesterday and maybe even test this one. So it would not surprise me to see us get into this 620 to 640 range. So my cue to sell that put option will be when I see this VIX spike to 28 or 30, and whatever that equals in terms of where SPY is at, and depending on the news flow. So that's just personally what I'm going to do. For other people who don't fancy it or even are getting bearish, you can start thinking about if you wanted to roll out and down one side of the trade. So you could start looking at your 650 strike and say, I'd actually like to roll that out and down. And that's if you were anxious about the trade. I'm personally not. So for me, it's actually about taking off that long put soon. That's what I'm looking at, and leaving the two naked puts open. And the reason for that is my belief is SPY is going to resume its upward channel and probably take out 7,000. So if I could actually get a sign on SPY now, it wouldn't really bother me too much, to be quite honest with you. And that's why I'm looking at selling that long put option, trying to take that benefit off the table. And then what will most likely happen, in my opinion, is that the other two put options will just expire worthless. So if you look at it now, combined there, that's about $25 or $2,500 in premium. So that would effectively be the equivalent of SPY at the moment getting up to kind of 685, which it was at before. So in terms of that, if I sold my put option now and the others eroded, I will be making a lot of premium. And don't forget, it's twice the premium on this one as well, because we've sold two puts. So it's actually $22 plus 34, which would be $36, and plus the original credit. You're talking about a trade that was more than likely going to give us $500 profit, giving us nearly $4,000 profit. And that's what I'm looking at there in that particular trade. So just mentioning Bitcoin, because we spoke about it yesterday. You can see at the video time yesterday, Bitcoin was testing this low, it held. And it's kind of consolidating here and now. So that's going to be important for the stock market as well. Again, just to reiterate why, well, if people are highly leveraged to Bitcoin and all of a sudden, they're getting margin calls, they might start selling stocks to keep their Bitcoin positions. There's going to be a knock-on impact there. So, for the stock market to go up, I think Bitcoin needs to hold here too. So it's worth keeping an eye on it. Even though I don't trade it, you just need to keep an eye on it as well. And then finally, a couple of announcements today. We've got the minutes of the Fed's meeting. And really, the market is kind of going down on two reasons. A is really the AI bubble is it bursting? I don't think it is, but there's commentary out there. And then second, the likelihood of interest rate cuts is starting to dwindle. And that's obviously causing markets to sell off too. And you can see that by the 10-year being at 4.12%. So, okay, just in summary, not worried about my short put in the 620. Leave that alone. For me, I'm going to aggressively manage the ratio put spread. I'm just hoping for another downward move in SPY. I much rather see the shorter term losses because I think I'll get much higher longer term gains. But for those of you who don't fancy that, you can just leave the ratio put spread alone. Don't do anything with it. Or if you're getting anxious, then even if you think this is going to continue this sell off, well, then you could roll out and down if you wished. And again, just please contact me if you need any help. Okay, that's it for today. Thanks and bye for now.